you look at a financial statement, and this is my rough draft of one, this is the basis of financial intelligence, the basis of your financial IQ. This is why your banker asks you for your financial statement. Your banker does not ask you for your report card. The banker does not give you a great grades or what school you went to. The banker wants to see your financial statement, income, and balance sheet, because this shows them how smart you are financially. This is more sophisticated than just your credit score. Anyway, financial statements has income, expense, asset, and liability. So when most people buy a house, liability, when most people buy a house, what you have here is a mortgage. And it looks like you have a house here, which is an asset, but that's not really accurate. What determines if something's an asset or liability is the most important word in financial intelligence, and the word is cash flow. And we ask any accountant how important this is. So as a young boy, my rich dad very simply said, assets put money in your pocket. Cash flows into your pocket. And a liability takes money from your pocket. So if you're truthful about it, you say, does my house take money from my pocket? And I would say for most people, every month their house takes money from their pocket. And then the savers say, but my house is paid off. I don't have a mortgage. But you still have expense, insurance, and upkeep. So the house is taking money from your pocket. So my point here is this. If I have a house and money is flowing out of my pocket, that house is a liability. So my personal residence, my home, is a liability. Now, I love my house. I want you all to have your dream houses and all this. But I don't call my personal residence